One of my favorite topics to talk about, hands down, is chart structure. Now, this is going to be the most boring video you're going to watch. It is going to be basically paint drying. Why is this my favorite topic? Because honestly, it's everything. If you don't understand the structure of the chart, you're flying blind. It's the foundation, the blueprint for reading any market. And just like if you were building a house, you're going to need a full set of tools to get it done properly. Price structure is your toolbox. First things first, you may need to zoom out to a higher time frame that'll give you a little more clarity. They help you answer the basics. Are we in a bullish market? Are we in a bearish market? When you zoom out, you'll start to see what I call the rhythm of the market. In most charts, you'll notice three major pushes, either to the upside or downside. Price tends to surge in threes. That rhythm, that structure, it's not random. It's the market cycling, constantly evolving. Now let's break it down. What is price structure really? It's the pattern of how price moves on a chart in waves, in cycles, forming higher highs, lower lows, and periods of consolidation. It's more than just candlesticks. It's how those candlesticks connect to tell a story. You're watching the market breathe, push, and pull. And when you learn to read that structure, you'll start to see the intent behind the price. There's a few tools that you should bring with you. Look at the trends. Is it making higher highs or lower lows? Look at support and resistance. These zones where price reacts consistently. Look in the market cycles. Are you in an impulsive move, correction? Are you in consolidation? Look at your high and low points. Where is price now? Is it near the lowest? Is it near the highest of price? Look at the volume. Who is back in the move? Let's say you're in an uptrend. How do you know if it's going to continue or reverse? You got to look at the sequence of highs and lows. A bullish market creates higher highs and higher lows, and a bearish market makes lower highs and lower lows. If things flatten out with equal highs and equal lows, you're probably looking at consolidation. That's where the patterns like flags, triangles, and all different types of other reversal patterns show up. Price is usually resting if it's in consolidation for the next move. And when price breaks out of these patterns, usually volume is backing it. You got confirmation. That's where the money is. So, how do I break down the chart in mind? Step one, identify the trend. Draw my trend line. Mark out the key support and resistance zones. Watch for the consolidation or the breakout. And I look at other indicators like the EMA, the RSI. Each of these tools is going to help you read the energy of the market. If I see three major surges in one direction, I pay attention. That's a signal the market may be getting tired. A reversal might be coming soon. But remember, there are no guarantees. Price structure is a guide, not a crystal ball. External events, fundamental news, they can disrupt everything. And that's why structure matters. When chaos hits, structure gives you something to come back to. So the next time you open up a chart, don't just look at price. Look at the structure, the story, the sequence, the flow. That's where the edge is. So we're going to look at a little bit more of this chart, and then I'm going to go ahead and continue it. I'm going to fast forward it just so that we can get more onto the topic of consolidation. This chart in front of us Shows a lot of good market volume. It's going up, it's going down very quickly with these 1 minute candles. Consolidation. This is when the market is moving pretty much sideways. This is what other people would say that price was stuck in a range. This is basically the market's resting phase. Here's one, and we're going to mark out a couple more. Here's some highs, here's some lows, and that's going to be number two. Some traders try to scalp during consolidation, quick in and out at the top, at the bottom. Here's a highs, here's some lows, and you can see towards the right side that it climbed out of here. Here's number three, some highs, some lows. We're on the 4 hour chart, so we're very zoomed out. Consolidation can be an emotional roller coaster. You can enter in a trade, you're in profit, you're in drawdown, and it's just going up and down in between these two imaginary rectangles that I drew on my chart. This is number four. Let's see if we could find something more closer to what today's time. So here's all the highs, here's all the lows. And if you were paying attention, you could see that price broke out of this consolidation. And this could be an opportunity where you can actually place a buy order at this breakout, knowing that there's volume to back it.